Yes, we are going live. Forbexreading. We are here. Let me say hello to everybody who's in the room. I'd like to get few thumb up for those who are within, so that we may start. Okay, let's wait a bit more. It seems that few of the attendants are just waiting to get in live with us, and till then I'm going to set up here with the charts, because we are going to discuss a lot of things as a continuation of the previous webinar, that it was about how to put the basement and how to get ready for what is really important to build up your confidence on trading and to become a professional, with other words. So here we are, and as you may see, we have the MetaTrader 4, and as I said, I would like this webinar to be a continuation. And previously, for those who was attending the webinar, of course, they already know that we was talking about the pivot indicators and why they are so important, the levels of what they are showing, support, resistance, Fibonacci lines, and of course consolidation areas. And now I would like to go further with this aspect by showing you two MetaTrader 4 platforms. So this is one of my MetaTrader 4 platform, as you may see, and this is another one. I'm doing this and I'm showing you two different MetaTrader 4 because as we get more experience and we get the feedback from the members, we got to the idea that we have to explain once again few aspects in order to set your pivot indicator correctly. So for example, on this MetaTrader 4, as you may see in the left hand side left hand side corner of the screen, we have server time and local time. This is really important when you set your indicator, because there is a difference between your local time and the time of the broker, the server time. As you see here, the difference is of 3 hours. So in this case, just keep in mind that the difference is 3 hours. But at this broker, as you may see, so it is quite possible, depending on what broker you're using, to have a different time setting and the difference of hours between server and local time. And here on this broker, you can see that the difference, there is no difference. The local time is exactly with the server time. And if we access the indicators, yes, these are exactly the indicators that you are using. So we set the local time at 2 and the destination time, which is the server time, at 2 as well. And here is how you know that your local time, it is UTC2. So once again, so in order to know exactly what your local time is, you access the clock of your computer, you go to the data and time settings, and here it is, UTC2. So you enter your local time value 2, and because we are on this MetaTrader 4 and there is no difference, the same number will apply to the server time too. So okay, and this is how you set correctly your pivot indicator for MetaTrader 4, where the difference is where is no difference between local time and server time. Okay, it is really important because otherwise, let me show you. If you are going to set a higher and the difference of 3, just look at the indicator. Yes, the value of the support line of Fibonacci, everything's changed, and it is not how it should be. So you have to be really careful just right before setting up your indicators to look at these elements. Okay, so now your pivots indicator are set correctly, and let's stay on Euro US dollar chart and to get a clear picture of what's going in the market and why these levels are important. As you already know, the pivots line are showing you the support, resistance line, and Fibonacci lines in advance. They set all these parameters exactly at the market open of each day based on the information of the previous day. And here we are. As you may see, support level 1, 2, and on the upper side, we have resistance 1, 2, and 3. Okay, why this information was really important to have it on the charts just at the right time and during the day? Because as you may see here, for this day, for example, today, yes, it got really obvious that the price moved to the support area, and yes, at that level also, since we had demand area, the price reacted in a such way that it was somehow predicted that a rejection may acquire, and that happened truly there, and it is quite obvious. So if we go on different charts, you may see that these levels are really important. At those levels, something will really expected to happen. As you may see, at that level, we had a rejection also here at the pivot line. Okay, so do not forget, take your charts and indicators really seriously and inspect these elements. And now, since it is quite obvious why these levels are important, resistance level, support level, and Fibonacci levels. At those levels, generally on the main chart, something is expected to happen, a rejection. And when we are referring to support, resistance, Fibonacci line, and pivots line, you have to take these based on the same principles. They work somehow on the same way, and same way works the supply and demand area. And to get a deeper level of understanding, you have to get beyond the indicators and to reflect a bit about how the price in the market is established. So the price in the market today, we are going to theorize a bit, and this will help you a bit more, I'm quite sure. So the price in the market, it is determined between the supply and the demand. So demand and supply contribute to the movement of the price in the market. And here, for example, on this chart on US dollar Japanese yen, as you may see, in this area, we have a demand area. Yes. And on the upper side, we have supply area. Okay, let's go to other charts as well, just to make a bit of practice on this aspect and to get a clearer picture of why supply area is important and why demand area is important as well. As I said, they work similarly, all those indicators on the same principle, and they give you quite a lot of good information that you are going to have to take into account when you are going to make your trading decisions. And at this level, yes, on the upper side, for example, we have the supply area. We had also the yesterday's low, and by the next week we are going to approach the divergency, but I may imagine that some of you are already familiarized, and that's why I'm going to stop here with the idea, and I'm going to switch a bit towards the divergency, because here is a really important aspect that we can see already. So the price moved in the supply area. Yes, the price moves making higher highs, and at that level, if you look at our indicator, we had a divergency. Yes, so now you can understand clearly why it is really important to look for opportunities in areas where we have supply and demand, because supply generally is a level that indicates the presence of sellers, and conversely, if we are talking about demand area represents an area where the buyers stepped in. And coming back at this point on our charts, so we had the information that there is a supply area, we got a divergency, and the price from that point, as we expected, just went downwards. Such a trade, if you're going to look, and I really assume that you already know, in our method it is called a 5 minutes retracement, and in binary options such a trade takes 5 minutes to expiry, and this one was really nice, as you may see. If all the rules were applied, I'm quite sure you have taken this trade and it was a clear winning trade. Okay, so these are the aspects that are really important when we take in consideration supply and demand area. Those are the areas where you have to look for opportunities. Those are the areas where we can predict. Another assumption that you can take into account, just to have a better understanding of what's happening at those levels, I'm going to tell you that banks, institutions, and market makers, they are executing their trades. They are making the market to move as well. So at this level, you can imagine and take it really seriously, the way I'm telling you that at this level, yes, exactly at this level, those market maker institution, here is a divergency as well. So there's no coincidence in what we are teaching you. Okay, and then the market moves downwards. Yes, clearly. Really nice trade here as well. Okay, so at those levels, you can imagine and take it quite seriously, as I'm explaining to you, that institution and money makers opened their order, and that order is still open. So it was a selling order. That means that in the future, it is quite possible that at that level, the order, if it is still active, the market to move downwards. And here moved downwards clearly and obviously. Good. And since I have explained to you about this aspect, now I would like to put some videos that you already may find. And here is an example in real time. It was recorded in real time of one of these trades, so that you may see why it is really important to have the feeling of the market at those levels of supply and demand, and then accordingly to the rules to take the trades. So now I'm going to load the video, and here is a trade of 2 minutes reversal based on this principle. Okay, so we are back to our chart, and in the video you saw a 2 minutes reversal put trade. So the price moved in the supply area, and then with all the rules that you may find in the methods section of our website, of course, here you have taken the trade and it was successfully, and it is obvious the markets are predictable somehow, and with a high probability. That's how you have to take a trade. Here on this chart again, let me show you. So we had the support area. We still have this area that is a demand area, and I'm going to show you how the price moved. It made lower low, it got in the supply area, and if you look at our indicator, we had here a divergence as well, and the market was quite predictable at that level. So those are the levels where you have to search for opportunities generally when we are looking for 2 minutes reversal or for a divergency or a retracement of 5 minutes. Yes, and now as you may see here in the left right hand side area, we have some updates of the indicators, updates that you are going to get quite soon. You are going to benefit of this aspect, and they are going to help you even more. So if you're a binary option trader, you already have 6 exceptional trading methods that if you are applying the rules, you're going to have extremely good results, same as us. It takes a bit of time to learn, but then you're going to master and you're going to be a professional. We are professionals, and now since we have this update, you are going to benefit. Everybody who's a member of Forbexreading, as long as you are registered with us, you are going to get for free any update, and these are really useful when it comes to look in the market and trade spot trading. With other words, Forex, as most of you know. So here it is, the indicator. In few days, you are going to get the update. We are going to send to you this. And just to show you why and how you can use it. So by next week, we are going to approach and to teach you about the divergence. We are going to tackle this subject in more detailed way. But till then, assuming that you already understand this aspect, I'm going to show you that here, for example, for today, okay, somebody is bothering me, but we have a webinar. So today on Euro US dollar, as you may see, we have still active 3-4 divergences on M5. On M5 is this one, but it is not with interest at all. On M30, let's check this one. It's still active, not with interest at all. And on 4 hours time frame. Okay, let's wait. And here it is. As you may see, we had a really nice hidden divergence. Exactly based on the same rules that we are teaching you, same way you have to trade on spot trading. Same rules apply in binary options and in spot trading on higher time frames. So this was a really nice downwards trade based on the rules that we are teaching you on a higher time frame. This is how you are going to benefit. And also today we had a trade just to make it more obvious, and on Euro US on 30 minutes, now it is not available anymore, but I have to explain to you. So on the 30 minutes chart, here we got a divergence. Let me show you. So the price here makes a lower high, and on the indicator when we got, okay, sorry, Okay, it seems that it was on the 15 minutes, not here. It's here, exactly. So we got the divergence here, and our entry based on this principle. Okay, on Euro US, let's see. It was this one. So our entry was here. And of course, since we have a support area, a demand area, and a support line, we just close the trade in profit at that level. And this is how you have to look at the market, and based on these principles you can take a really nice trade. Otherwise, on US dollar Swiss franc we had quite a similar trade, and yes, here is where our divergence was. Yes, we got a signal at that time, and here is the trade, how it was executed, and where we set our take profit, of course, at the level of the support. And that's how the trade looks. Really nice. Okay, based on the same principle, we went in the direction, it is a bounce. Yes, we went in the direction of the uptrend, and that was the trade. Good. So now you know for sure how you can use the divergence aspect of our multi-time frame indicator that we are going to benefit. Now you also understand why supply area, resistance area, and Fibonacci lines are really important. And from now on, you have to take into account these aspects really seriously, because these are the elements and where you can expect from the market to get in the direction. And let's switch some between some charts and to show you once again why this aspect it is really important. Yes, we have here a supply area, so we know that at this level we may expect a rejection. Okay, and it happens not just once, it happens multiple times, and all these can be predicted. Yes, first time we got a rejection at this level, the supply comes from the past. It is the level that we assume that the market makers had opened their position, and as you may see, it lasts for that's the level. And if you remember, last time we spoke about change of polarity, and here is that little aspect that is important as well. So at that level where the change of polarity happened, we got a demand area, and here it is. Yes, this level, and then this level again and again. So at that level, it is quite obvious that the market makers, banks, institutional, are still keeping the order open, and from there we go with the smart money and we take the most out of it, the most advantageous levels are these: supply, demand, support, Fibonacci lines. Okay, look at them really seriously. Practice, look at your charts generally. Now, if you are a beginner, just open your charts and exercise a bit by taking a look and see what the market is doing. Here on Euro US also, let me show you. So we had this really nice level, okay? And if we go and look, okay, I'm trying to get rid of this. Okay, so if we are going to look in the past, let's put a level here and see what's happened in the past, from where that demand area comes. Okay, I have to switch to a higher time frame because it will be much easier. Okay, it comes exactly from this level. What happened at this level? Last time, and now I'm going to repeat, we was explaining to you about consolidation areas and change in polarity. So as you may see, here was a change in polarity, then it was a consolidation, and it got really obvious that the buyers at this level entered, and same happened again and again. And now I'm going to show to you a few aspects about what I said to you. So here is drawing. Yes, this is how a resistance line is generally, and the coincidence is that the resistance line is always a supply area. So from those at those levels, sellers entered in the market, and the market then went down. So that's how you have to look at this aspect. A support area is also, it's an area where there is demand for that currency, and from that point the market moves upwards. Of course, there are moments when a support area is broken and support area becomes resistance. Yes, in many situations you can see that once a support area is broken, it becomes resistance. Bears who went short here, yes, and where the orders were opened, stopped selling at this moment, and from this level, okay, the trades, the sellers got out and the buyers got in. This is the moment that we mentioned to you, and it is the change of polarity, and generally comes with a consolidation area, as you may see. Also on the chart, yes, I told you, it's a consolidation area where generally where the switch in polarity happens. And this is really important when you are going to have a trade that is based on the break of 28, moving average of 28. Go through the rules and you will see exactly what I'm referring. Okay, and here is another aspect, is the same, but referring to resistance, that it becomes support after it is broken. Here it was the consolidation, and then no more buyers. The buyers just left, and at that level the sellers stepped in. Okay, so generally for today we had the supply discussions about supply and demand, why they are really important, and how to take the advantages of these levels. Go through the rules, uh, focus on these aspects, and you are going to find the best trades based on the rules if you are taking this in consideration. And once you have the full understanding of what's happening in the market, okay, because it's always a fight between sellers and buyers, between demand and supply, you are going to anticipate extremely well those moments where you have to take action and to step in and take the trade. About this trade again, here, as you may see, it was the consolidation, then the break. We already got a divergence, and that was the moment when we decided to enter the trade, because a break was expected. The trend was strong up. We had yesterday great news that was still keeping up the market towards the support area. Our target was the support area here on spot trading, and boom, a really nice trade based on the principles that you may find in binary trading as well. I showed to you a video about the 2 minutes reversal, and now based on the same principles, now we are going to watch a 5 minutes retracement called trade. Here it is. Okay, so we are back to our chart, and at this moment I'm going to tell you that supply and demand areas are represented, of course, with green, with gray, and sometimes, because uh, nothing is perfect on the world, these areas that are left by our indicators automatically uh, has to be sometimes corrected, and quite often you will see that I'm readjusting this area like this, because the truly available demand area, it is from this point to the first blue Heikin-Ashi candlestick. So this is the corrections that you are going to practice when you see that there is a bit of a difference. This is really correct. Yes, this is correct as well. So generally, the indicator will leave the supply and demand areas really correct. I'm going to switch between charts just to show you that generally most of them are correctly represented. Yes. Okay, next chart. Here you may apply a bit of correction as well, but generally they are correct. Sometimes when you see little differences, that's why you have these rectangles here to use them. So you take the rectangle and you adjust a bit the supply and demand area just to make it perfect. This is perfect from the start. I'm drawing this, and also use your MetaTrader chart, all of those elements that you may find here, and use them. So take the line, and when you spot a divergency like this one, for example, yeah, okay, that's not really a divergency. Let's search for another one, or let's talk about directly this one. Yes, so you take the tool, you draw the line, exercise a bit, and this will help you to anticipate. Once you are going to learn the divergency, you can really anticipate these trades way ahead, minutes ahead, and that will make you even more vigilant and a better trader, of course. And you are going to get a signal for sure also. But once you learn to anticipate the divergences, and about the divergence itself, we are going to talk about this aspect by next week. Till then, I hope that you got some really useful information. Practice, look at the charts, draw correctly the supply areas, and go through the rules. Exercise. You are going to become an expert just if you are going to wring out the best of you, and this is the way you have to do it, exercising. I'm quite sure you have a lot of potential. Everybody inside is a trader somehow, but you have to find out this aspect, and the only way it is by learning the rules, memorizing, and applying the rules exactly where it is the right moment, and you are going to have the best results. And now, since we are getting at the very end of our webinar, I would like to ask if you have any questions, and I'm going to give you a reply right now if there's any inquiries, with the utmost interest to help you. And in the meantime, I would like to remind to you that on your account, in your Forbextrading.com account, you can really easily access the message from here. You enter a title and you may ask anything. You may upload photos of different situations. Just feel free to upload any situation or anything that it is not totally clear based on the rules, and we are going to reply to you as soon as possible. Generally, within few hours, we uh, are quite often online because, of course, we are full-time traders. We are trading, and meanwhile, we can answer to questions as well. If we have something else to do, okay, that's obvious. We are going to reply to you anyway in maximum 48 hours. So that's what I would like from you guys, to come up with questions based on your trading experience that you have, and within few hours you're going to get the answer. So we are here again. Everything seems clearly. Nobody's asking. Everybody's shy. Let me ask you once again. Any questions? Please, now's the moment. We are here live with charts, and I can give you an answer to any of the questions that has something to do with binary options trading and spot trading as well, and generally forex trading. So I'm waiting. Okay, so no questions. Good, guys. And because we are here at this moment, I have to say thank you for your presence, at this webinar. I salute you from the team of representing the team of Forex Trading, Sabine, Bura, Anina, and see you next week, guys. Till then, all the best, good trading, take the best opportunities, and show up with the results. Keep up the good results, and let's keep in touch by next week. Okay, bye.